Welcome to this educational explainer where we take a data-driven look at Wyandotte County for real estate investors. This is brought to you by Alpine Property Management, Kansas City. Let's just jump right into the data, shall we?
Okay, here's what we're covering today. We'll look at the overlooked Kansas market, break down the numbers, and navigate Missouri versus Kansas law. Then we'll check out the Panasonic demand driver, uncover the property tax catch, and finally, discuss choosing your submarket.
Section 1. The overlooked Kansas market beyond Missouri.
So while remote investors naturally obsess over Missouri cash flow markets like Independence and Raytown, the Kansas side of the state line gets skipped way more often than it really should. The average Kansas City, Kansas home value sits right around $198,000. Now that places it well below the roughly $289,000 metro median. That's a massive advantage when you're trying to make the rent-to-price ratio actually work in your favor. When you're buying at that sub-$200,000 mark, you know you're squarely in Class B and Class C rental territory. For an investor focused on pure cash flow, acquiring property at this price point means less capital tied up in a single asset, and you have a much higher likelihood of hitting that 1% rule for monthly rental income compared to the broader, more expensive metro area.
Section 2. Breaking down the numbers, a side-by-side comparison.
Let's look at a 3-bedroom home in Wyandotte County compared to popular Missouri suburbs like Independence or Raytown. What's really interesting here is that the entry prices and top-line rents are remarkably similar. You're typically looking at an entry price between $150,000 and $210,000 across all three of these markets. Plus, that exact same house will predictably bring in about $1,200 to $1,550 a month in rent, regardless of which side of the state line it actually sits on. Since the top-line revenue and the initial acquisition costs match up so closely, the real battle for your return on investment is fought entirely in the margins. It absolutely comes down to carrying costs, property taxes, and the governing laws that dictate how you manage that specific asset. This builds a really strong case for diversification away from Jackson County reassessment volatility, assuming you understand the local rules of the game.
Section 3. Missouri versus Kansas law, navigating the state line. Now, keep in mind this is an educational explainer and not legal or tax advice, but understanding these statutory differences is absolutely critical for your daily operations. So what does Kansas landlord law change about owning a KCK rental? Well, a crucial point here is that a Wyandotte County rental answers entirely to the Kansas Residential Landlord and Tenant Act. Crossing a mere street, literally, just state line road, puts you in a completely different legal universe. You can't just copy and paste a Missouri lease agreement and expect it to hold up or be compliant in Kansas. Your lease templates, your eviction timelines, and your general understanding of tenant rights must change the very moment you cross that border. Actually, a lot of out-of-state investors just assume the entire metro operates under one single rulebook. But treating Kansas City as a single municipality is a really fast track to compliance issues and costly legal headaches. Operating in Kansas comes with a very specific set of regulatory trade-offs. On the one hand, you face strict deposit ceilings in Kansas. You're limited to a maximum of 1 month of rent for a security deposit on an unfurnished unit, and you have a strict 30-day return window for those deposits. However, this strictness on the front end is often offset by a major operational advantage on the back end. By crossing into Kansas, you operate completely outside of Kansas City, Missouri's recent forced voucher acceptance rules and fair housing ordinance turmoil. For remote investors, completely avoiding those mandatory voucher programs might perfectly align with your broader property management strategy, making these strict deposit limits a highly worthwhile trade-off to model into your plans.
Section 4. The Panasonic demand driver, Western Wyandotte's catalyst.
Beyond the legal framework, there's a massive economic engine pulling renter demand toward the western edge of the metro area. Panasonic Energy is opening a monumental $4 billion electric vehicle battery plant in nearby DeSoto in July 2025. That's a staggering amount of capital flowing into the immediate region. A mega plant like this doesn't just bring direct factory jobs. It brings secondary businesses, massive infrastructure improvements, and suppliers who all need to set up shop nearby. Even though the plant is technically located in neighboring Johnson County, it sits on the far western edge of the metro, and geography plays a huge role in where all these new workers are actually going to live.
That specific facility expects to ramp up to roughly 4,000 to 4,500 workers. To put that into perspective, imagine a machine operator earning a solid $50,000 salary at this new plant. They're effectively priced out of the premium Johnson County rental markets right next door, where rents are just way too high for that income bracket. However, that exact same worker is a perfect candidate for a $1,300 rental just a few minutes north in Wyandotte County submarkets like Piper or Bonner Springs. The tenant demand pull here is highly directional, it's very real, and it's actively reshaping who wants to rent in the western half of Wyandotte County. This influx of steady working-class renters is exactly the demographic long-term cash flow investors should be targeting.
Section 5. The property tax catch, the silent deal killer.
Despite those lower entry prices and the strong renter demand we just discussed, we need to be radically transparent about the carrying cost that sinks otherwise clean deals. Property taxes in Wyandotte County can absolutely be a trap for the unwary. When underwriting a deal, you might look at a neighboring county like Johnson County and accidentally plug their relatively low tax rates into your Wyandotte County pro forma. If you guess the tax based on those neighboring averages, your spreadsheet might show a very healthy 6% return. But reality hits hard when the notoriously high local mill levies take their cut. A mill levy is simply the specific local tax rate applied to the assessed value of your property. Because Wyandotte County has high mill levies, that expected 6% return can quickly get slashed in half, straight down to 3%. It's literally the single most common error out-of-state investors make in this particular market.
Alpine Property Management has been guiding investors through this specific market since 2013, and they've seen this exact mistake ruin countless investments. As Alpine founder Marcus Painter says, quote, "Pull the actual parcel tax history before you write the offer, never a county average," end quote. Let me explain why this matters so much. If a seller has lived in a property for 20 years, their tax base is artificially low, which is known as the seller's frozen basis. The moment you purchase that property, the county reassesses it to the current market value. If you base your numbers on the seller's old tax bill, your expected cash flow will be completely crushed by the new, much higher assessment. When you model the tax line honestly and include local rental license fees, plenty of Wyandotte deals still work beautifully, but you absolutely have to do the math on the specific parcel before you commit your capital.
Section 6. Choosing your submarket. Where to deploy capital. Treating Wyandotte County as a single, uniform market is the fastest way to buy the wrong house. You really have to know precisely where you're deploying your capital because the neighborhoods vary wildly. Western Wyandotte leans heavily toward investors wanting a blend of cash flow and future growth driven by that Panasonic plant we just talked about. The tenant pool is deep, and the housing stock generally has fewer deferred maintenance surprises. Moving to the southwest into areas like Turner gives you classic, stable Class B cash flow with older but solid properties. Then you have the urban core near downtown Kansas City, Kansas. While the urban core offers the absolute cheapest entry prices, it requires highly intensive property management, and you must be prepared to deal with heavy tenant turnover. For remote owners, the western and southwest lands are typically the safest and most reliable choices for those first few purchases.
So the ultimate question to leave you with is this. Are you underwriting for reality or just the spreadsheet? Wyandotte County offers incredible diversification and solid rent-to-price ratios, provided you do the math right and understand the local rules. For help managing your Kansas City rental property, call Alpine at 816-343-4520 or visit alpinekansascity.com.